All right, so this is the market review for FOMC week, which is the 21st, or I think it started on the 17th. So this must be the 17th is the, let's see, that's the third week of every month is the FOMC, it seems like. Okay, so in the FOMC, so previous week was PPI and CPI and PPI, so that's the second week. Third week is the FOMC rate decision. So I took a total of 2 trades. One trade was on Monday and one trade was Friday. And the point of interest for this week was this order block here. So we had a change in this, we had a swing low form here, and then we had this order block here for NASDAQ, and also same thing for the ES. So this order block was the point of interest. So we came into this point of interest on Tuesday, right? So on ES, we failed to go below Monday's low, versus on NQ, you can see that divergence here, Monday, Tuesday low. So then on Wednesday, we closed inside of Tuesday's range. So I thought Thursday might be another up day, followed by TGIF Friday. So classic Tuesday low of the week, expansion, and then TGIF. That was the initial thought when this formed on Tuesday. So Monday I had no expectation. It came down into the order block. I think I ended up taking a long on ES. And let me just double check. Monday I took a long, yeah, I took a long, and then Tuesday this happened. Wednesday I was going to trade Thursday. So once it closed inside Tuesday's candle, I was going to take it higher, and I did on Thursday. So the 2 trades that I took, if you look at ES on Monday, here's I traded London on Monday. So the trading here is Monday I traded the London session. And that was because if you zoom down, go to half an hour chart, you'll see that Monday it failed. It went below on ES. It went below this low. So we have low here created an Asia session that were violated in London. So we had a change in the state. I entered somewhere around here. Okay, so that was that trade. Once SMT formed, and if you look at NQ, same thing on half an hour chart. Monday we did not go below that. So that's NQ, and this is ES. So this is the SMT. I traded the London session, and then what I saw on Tuesday was on ES we failed to go Monday's low, versus on NQ Tuesday we went Monday's low, and we consolidated into the rest of the day. Right, Wednesday I thought we would have an expansion, which on Wednesday around 9:30 we sick liquidity. There was no SMT there, so I did not trade that. So you have a SMT here 8:30 on NQ. You have let's see, 8:30 Wednesday. If Tuesday, when there's SMT on Monday, Tuesday low, right? So Wednesday should be an expansion day. I would want to see a SMT form on the lows here, right? So we had 6:30 lows, we had 8:30 lows, 9:30 lows, right? We had so I want to see these lows get violated, SMT form, and then take off. I did not see that. So NQ, you have lows here, and then violated at 2 o'clock. I had a nice push up, but I did not take this trade because there's no SMT there. So if you look at same thing here, lower lows, and then these are higher lows, right? So same thing, lower lows, higher lows on NQ. I did not take this on Thursday. My bias was that if Wednesday closed like this, so you had Wednesday inside, close in that range, so we have a swing low form. So a couple things going on Wednesday. Once the candle closed, we could have another expansion higher, right? So that was on Thursday. That was supposed to happen. So how would that day form? That day would form either the daily profile would be either London reversal, meaning London gives a manipulation followed by reversal, or New York AM session gives a manipulation followed by an expansion higher, right? So you have a London low or a New York AM session low created. Either way, you'll be trading highs, and you'll be looking for a long off of the SMTs on the shorts on the lows. So you'll be looking for an SMT on the lows, right? So this is exactly what happened on ES. So if you look at Thursday, I took a long here on Thursday right at 9:30. I think I entered around on a 9-minute chart. So I'll go over the trade later, but the reason why I entered was for the fact that we had a Asia consolidation, so we expanded higher. We had no retracement, right? We expanded higher, we had no retracement or any type of reversal. So what happens? London, it starts consolidating, and then right before in your game session, it starts dropping down. It's actually started at 4:30, right? So 4:30, 3:30 to about 5 o'clock is a London kill zone. So London had a reversal. So London reverse, we're looking for SMTs on the lows now. Because we are within this 50% of the daily discount from the Wednesday, we're looking for some type of a divergence on the lows followed by expansion higher. The divergence would be also known as a manipulation, right? So London reverse, we're looking for another leg expansion. And how does that trade play out? So with the lows, do we see any SMT here? Well, not really. So if you look at ES, we created lows, equal lows, or slightly higher lows. So same thing with NQ. If you look at Thursday, we have lower lows and higher lows here, right? So no SMT until you zoom out. So if you zoom out to 4-hour chart, you'll see that on Thursday we went below this 2 o'clock candle's low, right? Same thing with ES. If you zoom out to a 4-hour chart, we see that this low, 2 o'clock, was never violated. Okay, so right in that 4 o'clock candle, I saw this wick coming. So when that wick started forming, there's an SMT here. That was a manipulation. That was the low that they manipulated under. There was an SMT. We have confirmation that this thing is gonna at least start going higher. So now let's look at the trade breakdown. Alright, so the trade breakdown, so we're expecting a Thursday to be bullish day. The trade breakdown came off of the 4-hour chart. So if you look at this 4-hour chart again, you have the divergence, right, from 2 o'clock, and ES doesn't have that. Right, the idea came from that there's a divergence there. Now, so if there's, so we took this liquidity at what time? So you go down to a 50-minute chart. That liquidity was taken with that drop, right, 615, right? Once that 615 drop happened, that liquidity was taken. Right, there was a divergence there. Market started going up. Now, this low that was liquidity was taking, I was monitoring that low. Right, are we breaking below that low to create that divergence? Right, because we didn't break below that low on ES, we created that divergence. Right, this is the low we're looking at. Right, this critical low. There's SMT there on 4-hour chart, and I'm looking for a change in the state of delivery from this low. Right, so this low hasn't been tagged. This low stayed in, so this low hasn't been tagged in ES. So let's look at ES chart. So because I traded ES, let's look at an ES chart. So I'm just flipping the two charts. So on 15-minute chart on ES, this low hasn't been taken. This low hasn't been taken. I was looking for the change in the state of delivery, at least on a 9-minute chart, to have this effect for me to enter. Right? I did not see this on 9-minute chart. That was the first time frame I would be looking at to enter, right? I didn't see that change in the state. 9-minute is still closed underneath, so that I have to wait till this 9-minute closes, right? But I didn't want to wait for that 9-minute because that happened to be a 9:45 candle, which is also off a 15-minute. So what I saw on 15-minute chart is that because on 15-minute chart it closed over this order block, we have a change in the state of delivery, I could enter at that candle. Right, so 9:45 was the earliest I could enter at that candle. Now, one thing to note is that this order block, so move this order block, these down close candle, is also happened to be a 5-minute breaker. Right, so there's a breaker there. So you have a down, down, up, down, cross over the breaker. So this becomes a breaker trade as well, right, on 5-minute chart. So the correlation, if you can see this, if you can see the breaker inside a 15-minute chart, right, those are strong correlation. The market is going to be turning, and then I took profit obviously above the this London Asia high over here. Now that happened to also fall in with that 5-minute breaker. I think I ended up marking out the breaker and taking profit that way. So marking out that breaker here, low, down, lower, low, right? So if you mark, that's the manipulation there. So I measured this whole move. 2.5 is here. You can, like, so if you measure, so I measure that down low. So yeah, so from here, this move here, that's your breaker. So you can start scaling out at 2.5, right? Because I entered there. Because I entered there on 15-minute chart, my stop loss was pretty wide, right? The stop loss was pretty wide on that one. Let's go to ES. Here, so ES 15-minute. So my stop loss was pretty wide. That's why I wanted to take profit at 4. Let's see. And also, the reason is, if we're having this bullish candle right at 9:45, we should see an expansion up to 11 o'clock, right? 11:30 should be our expansion. And if Thursday was supposed to be an expansion, right, we want to see either a Friday TGIF, right? So it might not give you a lot more expansion after 11 o'clock. So I ended up taking profit around 9:15. 11 o'clock, 10:30 pushed a little higher into 11, and then we started reversing back. So the way I took profit was based on multiple things. So Asia, the highs from Asia and London, I measured out the manipulation, the breaker on 5-minute chart, and aligned it with 4. Right. I also noted the time that 9:45 is my entry. I can at least hold till 10:30, 11 o'clock. So those all kind of align with these high here. So this is where I ended up taking the profit. This was I think it ended up being 1 to 2 trade as well. So if you measure the long position, and right at that, as that candle closed, my stop loss was here, and then right above this low was where I took profit. So 1 to 2.1, you can stretch that out and really make it to 1 to 2, but that's what the whole trade was overall. So at FOMC overall, the theory of Tuesday creating the low did not really play out, right? That idea didn't really play out, but we were able to build a trade based on that idea for the FOMC week. Compare this video with the CPI week, PPI week, and how the trade was, right? The PPI CPI week was off of the wick that was created at 8:30, right? And versus FOMC week rated the liquidity in specific time to get up there. Liquidity preferably under session and daily lows.